Hello, Paul. Good afternoon.
Good afternoon, Theo. Can you hear me okay?
Yes, loud and clear. How are you doing?
Very well, thank you. I'm very well indeed, and I hope you're well also.
Yes, absolutely. Paul, before you share the screen, just allow me to mention that tomorrow it's our next Market Talk series. We will host your good friend Sunil. Yeah?
Yep, that's right. Yep. We're just going to be, as always, just looking at how to improve our price action trading. It's a good way to spend our summers during, these hot holiday periods. We can still be working on our trading business. So that's what we're always focusing on.
So, yeah, I shared the link, and just give me 1 second, please. Yep, that's the right one. Okay, I think you can share your screen.
Excellent. I'm hoping that
Yep, everything's clear.
I hope that everybody can hear me. I hope that everybody can see the slides as well. That would be a good start.
Okay, for me, I wish you the best luck, Paul, and I will see you soon.
Super. Thank you, Theo. Good afternoon, everybody. I hope you can hear me okay. Hope you can see the slides. Good afternoon. I hope you are. Hope you're well wherever you're joining us from this afternoon. As always, I appreciate that we have a truly global audience. People who join us for our sessions, wherever you are, you're very, very welcome. Myself and everyone here at Admirals, we hope you're having a good year and enjoying these rather interesting markets. And today, to help us navigate and engage with those markets, we're going to talk a little bit more about how to improve your price action trading plan. Part 3. So what I said was that over these kind of summer months, all right, so let's say from sort of May to the end of September, October, I would be putting in just sessions like this where we're just going to recap some of the elements we go through and then just look at helping just you refine it and improve your price action trading plan. So if you have one, well, this should hopefully reinforce all the good behaviors that we want to see from trading. If you haven't, well, hopefully this will help get you across the line in terms of understanding, the importance of a trading plan and actually how you can just build a very simple one to get you engaged and started with markets. As always, remember, here we are, Admirals, a Forex and CFD broker with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving the opportunity to engage with markets, utilizing both the MT4 and MT5 platforms. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help you. So what are we going to talk about today? Well, not unsurprisingly, based upon what we've covered so far, it's all going to be focused on price action. We're going to go through a lot of the stuff that we went through in terms of recaps of parts 1 and 2. And we'll talk, as always, about, what is the importance of both refining and improving your plan and how we can utilize price action charts accordingly. And we'll just look back on, what's actually gone on some of the price action this month, and that is interesting because as I deliver this, we're at the end of August. August is normally quite a quiet month, all right, for markets because every man and woman is away on their holidays, and why wouldn't you be? Okay, if you have the opportunity. But nevertheless, markets still continue. Okay, markets still go on, and we'll look at basically those markets through the prism of price action, and as always, we'll do that looking at the live markets at the end. So plenty for us to get through. If you've got questions or comments or thoughts, you can put them in the chat box. Be interesting to know, of those of you joining us here today, how many of you actually have a price action trading plan in place? How many of you put one together that you could utilize and work with? Okay, so it's just gives you something to consider and to think about as we progress in our trading journeys. For those of you who don't know me, my name's Paul. All right, I've traded for a long time, I've traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities, being a trend trader for longer term trading and a reversal trader for sort of shorter term intraday trading. All of this, which comes out in our conversations in terms of whether we're trading, regardless of what instruments we're trading or what particular time frames we like to focus on. I think, we've done plenty on, introductions in terms of, why we're doing this session, namely that, that sometimes new traders can be a little bit overwhelmed, but actually by understanding price actions, charts, the movements of price over time, that actually allows you traders an opportunity to basically analyze markets, understand them, and engage and trade with them. And I as I always say, think of it like like you're learning a new language if you're new to trading, but it's a language that's well worth knowing. It might be a bit of a challenge at the start, but once you get into it, okay, once you understand, once it clicks for you, well, then you realize that, it opens up all sorts of opportunities for you as a trader. And we've been through an awful lot on our session, haven't we? Okay, and the good thing and the important thing is that I say it every week. I try to mix both a bit of hard skills, okay, like particular setups, and soft skills, things that actually will help you improve you as a trader and help you build a trading business. So there's a whole selection there. They're all recorded. They are all on the Admirals YouTube channel. So if you need to recap, they're there. If you just missed them, or you're just like one or two elements that you just need a bit more depth of understanding on, well, they're all there for you to be able to go and access and work with. And today, well, yeah, we're going to just carry on in the vein of the previous sessions we've done on terms of price action trading plans. So Philip says, where can we see the previous record? They are all on the Admirals YouTube channel. Okay, so if you just go onto YouTube, just in the search bar, Admirals Paul Wallace price action, you'll find that they are all there. They are also on the Admirals Facebook page as well, and I suspect they're also, you see them on the Admirals Telegram page as well, and links to it probably on Admirals Instagram. So they are all there. They're all recorded, and you have great access to them. So plenty of opportunity to upskill yourself on your trading journey. So, when we look about what we want to talk about today, we've been on our price action trading journey for a good few sessions. Philip says, thank you. You're very welcome, Philip. Thank you. Great to have the questions here. You are very welcome. So, as I said, we've been on our price action trading journey for a good few sessions, and we have covered a lot, as we've just shown, and they're all available on the Admirals YouTube channel. So this is a great opportunity for a few sessions to help refine and improve our price action trade plan. What I want to do is to just drive home the elements that we have covered in the first couple of sessions, because I think that's just really super important for you to A, understand the importance of a trading plan, and B, understand how price action fits into it. And then we'll have a little look at trade setups that have happened in the last few weeks, okay, for this particular month, and then we'll have a little look at live markets and see what's been going on there. So throughout, not only just price action, but you'll notice that any of the webinars that I've delivered here for Admirals on their education elements, I've always stressed very simple elements, okay, that since the very start of these, I've always talked about it's important for you to focus on what you can control. That's the important thing, okay? Focus on what you can control. And as price action traders, that means we plan our trades, trade our plan, and manage our risk. Okay, those are the three elements that are always within our control as traders. The market can be volatile, the market can change direction, the market can move, fastly, it can move slowly as it grinds. The market will do whatever it wants to do. Okay, your role is to plan your trades, trade your plan, and manage your risk. Those are the three elements. Those are the three things that you can control. And I've gone throughout all of this series and these sessions on improving your plan. I've always tried to stress that. And I've always said, have a word with yourself, okay? Time for a moment for reflection, okay? Have you been doing that? All right. Be honest with yourself, all right? And if you have been doing it, well, fair play, good for you. You can give yourself a pat on the back. Question is then, how do we improve? All right. How do we improve? How do we do those things and turn that into a simple plan that we can follow day in, day out? So in the first session, of improving, we talked about not only just a trading plan, but an overall strategic business plan for your trading business. So, we talked, lots of reasons where and how and why. But what I find is that without one, okay, traders tend to struggle with they can become a little overconfident, right? They can become a little overconfident. They have a little bit of a streak of good fortune, a streak of good trading. They start to become a little bit overconfident. They can have senses of a need for variety. Okay, they get bored of trading, the same old thing. So they have maybe a feeling a need for a bit of excitement. Okay, they're starting to feel that they are they're invincible as a trader, and they also have a feel of a need to be trading, okay? They need to be trading, okay? They need to be sat in front of the screens constantly trading, okay? Because they're in a particular good place. So all of those elements are there. And I find when a trader doesn't have a proper trading plan, both a business plan and a trading plan, these elements, they rip it. And there are other elements that, traders will demonstrate and manifest. But these elements come in, and what happens is, they tend to sort of lead traders, off the garden path, so to speak, as we would say here. It's how they kind of lead traders into dangerous places as a trader in terms of over trading, okay, which can be not only just simply the amount of trades you're putting on, but it can be in terms of the amount of risk you're taking on board. It can be the amount of time you're spending, amount of emotional capital, all of those elements. And so we talked about how it's important to have that to keep you on the straight and narrow, to act as almost like guidelines to keep you going in the right direction. And then what we talked about is, we talked about creating your own price action trading plan. What do we do? And here, what we've talked about is just 10 simple steps. They are not perfect, okay, but it's a good starting framework for a price action trader. Okay, and so as we say, and you hear me very quickly flick through it, okay, every week. But we talked about in terms of improving your price action trading plan. Step one, all right. As soon as you open a chart of anything, doesn't matter, euro, gold, Dow, doesn't matter. Define the levels of support and resistance that you find on your chart. Start at the monthly chart, go down to the weekly, down to the daily. Things like horizontal levels of support and resistance, dynamic support and resistance, which is where we see price bouncing off moving averages, and things like big round numbers. All right, so in gold, and the Russell, 2000 were big levels, in the last couple of months. Big round numbers, treble zeros, they can be actually very important, very useful, and we'll have a little look at one of them later on in terms of some of the trades for this month. But that's what we should be doing, defining levels of those support and resistance. In step two, what we want to do is define if there is a trend. I say it every week, good trends are very, very clear, all right? They will leap off the chart at you. The problem we have is that markets only tend to trend 20 to 30% of the time. What we can also find is that trends can always overshoot, okay, in terms of they go further, and they might undershoot, they might not go as far of it. That's part of trading trends, all right? That's just the very nature of the beast. But ideally, what we're looking to do as new traders, price action, we're looking to ride those trends, not fight them, okay? Look to ride those trends. And ideally, what we want to see is we want to see the weekly and the daily charts to be aligned in their trends. And, as I said, good trends leap off the chart. If you are struggling still, okay, and identifying a trend, well, then, we talked about just having a desperately simple way of just, where is price in relation to the sort of 50 and 200 period moving averages. If they're above it, well, then, we accept that as being in an uptrend until we see differently. Step three is, well, we want to see how does price react at those key levels that we've identified, because in an uptrend, we are looking to buy on a pullback at a level of support, and in a downtrend, we want to sell on a rally into a resistance. And those key levels can be things like the horizontal levels of horizontal static support and resistance levels we draw in from on step one. They can be, as I said, dynamic moving averages like here, okay, on the 20 period, the blue 20 period moving average, or they might even be, like I said, big round numbers, all right, okay, markets still recognize them, markets still like them. So we want to see how does price react. Okay, that's what we are particularly looking for. That's what we want to see. When market is in a trend, when we see it, as I said, we want to be, in an uptrend, we want to be looking at buying at pullback. support. Okay, so in this particular case, hopefully you can see that that 20-period moving average has been acting as support, hasn't it? And then we get basically pin bars here. We get a few pin bars there, and we can see that the 20 is still pointing up, it's still above the 50, and basically price is doing it. It's become, that has been dynamic support. Okay, dynamic support, and what we're looking for is, as price gets there, well, then what we're looking for is step 4, right? We're looking for price action triggers at those key levels that we identify. We need some price action triggers, okay, to give us an indication that, bang, this is our trigger, this is where we're looking to enter. So things like key day reversals, star formations, engulfing candles, inside bars, pin bars. In this particular case, I would say those three, they were all pin bars, okay, as was this one. But what we saw is, the price actually needed to pull back a little bit deeper before it went, okay. And so, there we had 3 pin bars, giving you 3 opportunities to get, into that dominant trend on its pullback, and an opportunity to be a buyer at a pullback at a level of support, okay. And that's what we're looking to do. Just keep it nice and simple, all right? That's it. That's what we're just looking to work with. What we also just want to be aware of is, step 5, is it part of a bigger chart pattern? And the reason being is that, we don't want to buy into resistance, or we don't want to sell into support if we're trading here, let's say on things like daily charts, etc. What we want to just work at is our entry part of something like a continuation pattern, like a flag or a triangle? In this case, some people might say that, well, Paul, that was, we were in an uptrend and this was a flag pattern that finished with a pin bar before it shot off, and I wouldn't disagree. Or is it something like a reversal pattern? Okay, was it something like it where we get an opportunity in front of like a head and shoulders or a double top or a bottom, etc. Those elements as well. So that, step 5 is just about, sometimes traders get super focused, on looking to trade that, that, let's say, that pin bar off support, and sometimes they can't see the wood for the trees. Okay, this is just about take a step back, look, is it part of a bigger chart pattern? Because that could help us, that could give us opportunity, or it could provide us with a warning. Then we talked about, the back 5. Step 6, risk. Okay, define your risk, accept it, and stick to it. As a trader, you are a risk manager first and a speculator second. We always manage risk. As I said, you're a risk manager first, a trader, a speculator second. We always use a stop loss. We never risk more than a small percentage of our capital on any one trade. And we also know our VA, our value at risk. And in the most simplest definition of that for today, that means is that we just know, what particular levels we have in terms of how many positions, how much overall capital do we have at risk, okay? Because sometimes traders can, over risk, okay? They can over leverage, okay? Invariably, they have positions that are too big. That is invariably what, when we start to see, emotional issues start to creep into the trader, when you've got you've got too many positions and those positions are too big and your overall exposure is far too big. So understand your overall value at risk. And there are there are lots of ways you can go into VAR. There's some you can really go into depth of it, but for the purposes of today, we just want you to be aware of, okay, how many positions do I have on, how much do I overall have in capital risk, and have a limit in place for that. And on the flip side of risk, well, is reward. Okay, risk to reward. We have to, when we look at step 7, reward, when we're coming to place our trade, are we going to have a target or are we going to have a trading stop? We should know our exits, always know our exits. What am I going to use? Am I going to use a target or am I going to use a trading stop? Either way, the important thing is that have the opportunity for an asymmetric reward to risk ratio, R3, you'll hear some traders talk about. And that's just literally, if I'm going to risk 100 pips, I want my trade to be able to make 150, 200, 300, 400, asymmetric reward to risk. When it comes to using a target or when it comes to use a trailing stop, and what I will say is neither is perfect. They both have their pros and cons. There is no such thing as perfection in trading. If anybody tries to tell you there is, there isn't. Okay, all right. You are always just basically, having to work out the pros and cons. And with rewards, whether you can use a target or a trailing, it's a case of, which one can you consistently employ in your trading, trade after trade after trade after 20 trades, 50 trades, 100 trades, 200 trades. That is. And the other important thing is make sure that you choose before your trade is placed, right? And what I mean by that is, you don't basically start off with a trailing stop and then just say, well, actually it's moving up, so I'm going to have this as my target. You don't change horses. Don't try and change horses mid-race, because that rarely ends well. So for me, okay, I generally tend to use a target, okay? And that means that sometimes it works really, really well for me. Sometimes that means I miss out on really great runs, and I'm prepared to accept that. Okay, I like my trades to be personally, I like my trades to be almost like they can be fire and forget. Namely, I know where my entry is, I know where my exit is if I'm wrong, where my stop loss is, and I know where my exit is if I'm right in terms of where the trade will move to. So even if I had to go away, or if I have to go and do something else, it's almost like the trade is like fire and forget. Okay, and and if that actually had to if that had to happen, I could do that, and I'm very, very happy with that. Other people will be different, and that's okay. As I said, there is no perfection. It's about which way can I basically consistently, execute that on my plan, trade after trade after trade. That is the important thing, which we'll touch on more in a moment. Step 8 is record, okay? Namely, always keep scrupulous records of your trading, okay? Ensure you're keeping those good records. Make sure you have a nice little trader spreadsheet in Excel. Now, there are lots of, let's say, commercial options for that these days if you wish to spend the money, but realistically, they can be just very simple, very simple sort of, spreadsheet, okay, that does it. And also a journal, okay, a trader's journal where what I suggest you do is, you just basically take screenshots of your trade as it's starting, after it ends, write out the details for it as you're going through your trading. You'll also want to keep an equity curve. And we've done previous sessions here about grading your trades for performance, execution, and confidence, right? And, those of you who, join us for our sessions, we know that, Dr. Alexander Elder, he does some fabulous webinar sessions here for Admirals, and he's also written some really good trading books. And one of those pieces of advice is that he offers in his book, Come Into My Trading Room, is keeping good records is the single most important contribution to your success. If you maintain scrupulous records, review them and learn from them, your performance will improve. And I absolutely 100% commend that message, okay? It's helped me in my own trading. It's helped me in the hundreds of thousands of traders that I've worked with, okay? I have never seen anyone who has been a long-term, sustainably successful trader who has not been keeping good records and reviewing and learning from them, all right? That is, it's the like a simple bedrock of performance that helps you get better as a trader. Step 9 is all about review, okay? And that's it. Once you've kept your records, review. Know your numbers so you're able to improve your performance. Review all of your trades. Review them at the end of the day, at the end of the week, at the end of the month, at the end of the quarter, maybe even at the end of the year, depending on how often you trade. Because what happens is, you can actually start to look into things like KPIs, key performance indicators. And what it allows you to do is it allows you to reinforce your best trading practices. Okay. And once you start to understand some simple KPIs, right, well, then invariably that helps you in terms of understanding, engaging your journey and how far you've got to go as a trader. We've got photos there, from my own background. There's a reason why, there's a reason why pilots do it. There's a reason why doctors and nurses do it. They review it because that's the way they improve their performance, and good traders equally will review their performance also. Step 10 is all about repeat, okay? Step 10, repeat. Consistency and discipline are key. It's hard to be consistent without being disciplined, hard to be disciplined without being consistent. What we're looking to do is, if we've been recording our trades and reviewing our trades, is what we want to be doing is repeating our good trades. Okay. As you start to do it, you will start to recognize the trends in your own trading. You'll start to recognize, where your good trades are and where your weak, sloppy, undisciplined trades are. And those are the ones we want to cut out. These are the things that help us just progress and move forward as a trader, and B, in terms of building a trading business. Okay, we repeat our good trades, cut out the sloppy, undisciplined, weak trades. All right, that's what we do, and that is a process that never ends. Okay, even after all my years, that is what we're looking to do. Okay, just repeat your good trades, cut out, minimize the sort of the sloppy trades. It's what helps you improve. It's what supports you to build a trading business. Review and repeat your good trades. And what I often say to traders, my own clients, is once you've taken a few good trades, print those off. Okay, if these are the trades that you like, okay, these are the trades that can resonate with you, print off those screenshots, put them all up around your wall. I used to have it in my trading office. Literally, the walls were just effectively covered with screenshots of all my best setups. Okay, and just for showing me, and it's just almost like I'm sat there, just literally sort of taking everything, because I know that I get to a point where I do nothing as a trader, unless I get my specific setup. Okay, I do nothing, and and once you know your setup, once you're very clear on it, it becomes easier to be patient. Okay, when you know what you're waiting for, and these are things that all help. They all help reinforce the best type of trading performance. Okay, and the best kind of conducting yourself as a trader with your business the best way possible. So, there's the kind of 10 steps, and I appreciate I've flown through them a little bit, but as I said, these sessions are recorded. You'll be able to watch them again. But this is 10 steps, okay, as an ultimate price action trading guide. If you're doing these things, okay, you're doing the right things day after day, okay, and that's the important thing. Sometimes new traders think they have to have the single best setup in the world, okay, or they need to overcomplicate a plan, okay, and the more complicated the plan, the better the trader they are. I can assure you it's quite the opposite. Less is more. Right? If you're doing these 10 steps, you're making sure that you're covering yourself off to do the important elements, and it is about embedding the right habits, okay, the right routines, the right correct business practices. These are the things that will actually take you further. That process of this is what will take you further in your trading journey. And as you do that, your trading skills will naturally just sort of, improve as you do all of the good elements. So, you have an access to this, take a screenshot of this page, okay, as I said, stick it up on your wall, okay, just make sure you're doing the right things, okay. It will help you enormously in ensuring that you just progress as a trader, and your skills will improve, okay, the more you follow your routines, the more you have a process, and the more you record your trades, the more you review your trades, and the more you repeat your good ones and cut out the rubbish ones. And you're a human being. Okay, you're a human being, which means you're going to make mistakes. Okay, which means that you will have periods where you might sort of not be trading as best as you would like. Okay, maybe your trade results are not what you would particularly like, but as long as you're doing this process, remember what I said right at the start. It's about focusing on the things you can control. Right, plan my trade my plan, manage my risk. If you're doing these 10 steps, you are filtering in, feeding into being able to do that. These are the things that you see good traders do again and again and again and again. And it's what we want to see you doing, okay, in your own trading. So, and before we switch across, let's have a little chat about the some of the trades just based upon what we've talked about there, okay. So this is interesting because we're into August, and normally, I would sort of, after the first week of August, personally, I sort of normally tend to sort of drift away from markets, take a little bit of a break from them, and I have done this time, okay. Even though I'm here talking to you today, I normally take a little bit of break, okay, 2-3 weeks, and just use it as an opportunity to sort of a bit of a downtime, bit of reflection, okay, a little bit of a break. So it means that when I come back September, October, November to the end of the year, ready for what I think will be an interesting end to 2023. But with that in mind, we can still look at what were the kind of trade setting up just based upon the rules that we have talked about here. What we have seen for a lot of this year, as you've been doing your analysis, you'd recognise that for a good part of that, okay, the Japanese yen has been very weak. Right? As I said, I specifically like to look at the FX markets, but what I'm going to share with you, or what I have there, is completely time frame and instrument agnostic. All right, even though we focus more on the kind of the higher time frames, in terms of the sort of technical skills, the price action skills, they are as valid on a 5-minute chart as they are on a monthly chart. And what we said is that Japanese yen has been very weak, and some of the other currencies, okay, have been very strong. So we've had periods of Swiss franc being strong, even the euro, even the dollar, sterling in particular, the last month or two. And so we see that kind of that strength and weakness, and when we see it reflected in the charts and the price action, and and we'll switch on to the live market in a moment. But we have had basically we had for the most part very strong uptrend. We went a little bit sideways, okay, a little bit sideways for a couple of weeks at the end of July, but as we came into August, across a couple of those yen pairs, and in particular here, what we saw was price, the dominant trend was still to the upside. We still had the 20 above the 50, which is way above the 200. We'd seen at the end of the last month, that the price had come down, okay, even though in uptrend prices come down to that 50 and had bounced up, and we saw price come back down again. And then what did we hear? What we have here is we have price printing a bullish engulfing candle, okay, to just basically went a little bit lower than the previous candle, completely engulfed it, okay, closes above the 20. All right, it's a strong bullish candle, and then it is in fact reflected by the second candle here, which is it's a bullish pin bar, which has bounced, as you can see, off that 20 period moving average. So price has been in an uptrend. As I said, we want to be buying pullbacks, okay, at levels of support in an uptrend. We have the 20 period moving average here, and then price basically has just moved much stronger than I was expecting, okay. And what happened is then we had a little bit of an end of that run, and we price pulled back. And what has it done again? Okay, last week is that invariably what we saw is we came back once again to that 20 period moving average, and then we've started to put bullish candles off that 20 there. The 20 still above the 50. We're still in an uptrend, and prices pull back. And if you look at quite a few of the yen pairs for August, having had a challenging last couple of weeks of July, what happened is we broke out of that, okay, and those trends particularly continued. And as I said, that's just what we're looking to do with our analysis. Price is just in an uptrend. If it is an uptrend, we're interested in it. When we see it pull back in an uptrend, we want to be looking at, is there an opportunity to buy at a decent level of support. And equally, we had that with Canadian dollar. Canadian dollar price has been a little bit volatile, okay, in terms of quite a few swings, but we have continued with for the most part, all right, we have had basically a pound strength and Canadian dollar weakness, okay, and we look at the weekly continued in its nice uptrend, and we can see that we had a very strong up move in July, all right, and then we topped out here, okay. That's an evening star formation there, okay, and price came back to the 50. But look, price is still basically, we've still got the 20 above the 50. We can see it crossed there at the early July. Okay, we've got the price 20 is above the 50. Price is just basically getting supported here by the 50, and then what do we see here? This is it's a bullish pin bar here, okay? This is, the bullish pin bar that allows us to effectively, it's a buying opportunity at the start of the month. Price basically moves up. You'd probably be a little bit surprised. You might be thinking, well, actually, Paul, price might be coming down. But that's no surprise. Remember, price never moves in a straight line. Price never moves in a straight line. We wish it did, but it doesn't. But the reality is that even in an uptrend, price will basically pull back in a downtrend. Price moves in a zigzag. It never moves in that kind of straight line, okay? And what we saw is price moves up, price pulls back. Price here, what do we have here? This big red, this red support level is a 000. It's 170, okay? 170,000, 170. And what do we get there? We get another bullish pin bar, okay, that is there also off the 20, off that big round number, and we can see price basically rallies its way up until it starts to loosen here. Then we see price pulls back again, and then at the end of towards the end of last week, we saw starting to see bullish price coming in again. So as I said, even though August is normally a very slim month in terms of slim pickings, okay, and it can be sometimes a bit of a quiet, tired sort of month because so many of the big players are away on holiday. There are still opportunities if you are just doing your reviews, just doing your analysis, okay, just taking your time, just being clear about what you want to do, okay. Ideally, we're looking to identify if there is a trend, looking to see if price pulls back, okay, if it pulls back to either a dynamic level of support like the moving average, or a big round number, okay, or just even a particular area, okay. Particular area is a key level that we see that is an opportunity for us to take a trade in the direction of the dominant, strongest trend. That's what we're particularly looking for. Even Palladium, and I wanted to put in a couple of examples like here, okay, just of crypto commodities, okay. So I appreciate some people may trade a lot of commodities, some people may not, but I think it's nice for you to be able to see different instruments, different time frames, different opportunities. Palladium has been in a significant downtrend for most of this particular year, and this is a good example of where we are in terms of August. Price, as I said, is still in that kind of dominant downtrend. We can actually see that price pulls back. Where does it pull back to? Okay, it pulls back to a level that has been significant in the past, 1781. Okay, a level of support which we think will turn into resistance. We then also generate this. There's a large bar, but it's a bearish. Even though it's got a little bit, it's a bullish close. That is still a bearish pin bar. It's a bearish rejection candle. Also at the 50-period moving average. Remember what I talk about: confluence of events. Okay, confluence events. We're looking for 2, 3, 4 things to come together at one time and place to give us, the opportunity for a trade, because there is a higher probability of price moving in one direction over the others. It's also why that a lot of the time there is actually nothing for you to do if you're doing good analysis, okay, and what your good trades are. Well, that actually a lot of the time is not that much for you to do. Good trading is quite boring. You're just sitting and waiting here. Price there is not really giving you anything of real excitement there, but it's actually when it pulls back, this is where our opportunity is. And we can see price drops, pulls back, okay, and it's dropped, but as I said, what we hear is I should have maybe drawn it in there, is 1200 there, big round number there, okay. It's a big round number which is acting as a level of support, so it becomes a bit of a natural target. And now what if you haven't already taken your sort of your profits here at the big round number, well, what people will be looking to do is say, well, Paul, is this got the opportunity for it to be excuse my drawing, a descending triangle? Okay, so what we would need to see is price, really strongly break and move there, and that maybe that's what happens in September as players start to come back to the market. Okay, as the institutional players come back from their holidays, maybe that's it. It's a possibility. But if you're doing your analysis every day, just doing a little bit of time, well, then you just wait to see an opportunity to trade with that what is still a downtrend. And that's reinforced here. This is the Euro Swiss. Okay, this is the daily chart for August here. And those of you who will trade FX or will trade this will recognise that that has been in Euro Swiss has been in a bit of a downtrend. You can see it certainly there during July. Price was in a significant downtrend, wasn't it? Okay, we had a bit of a bullish pullback. All right, we had a pullback into the start of this month. What did we get? Okay, well, actually, having pushed away, we got a pullback again. What happened is you can see there we printed a bearish pin bar, bearish rejection candle, which would have triggered, but actually has gone mostly sideways until it prints another one here. Okay, prints another one. All right, another bearish pin bar, bearish rejection candle, and price has drifted its way down for this month. And as I say, a bit like Palladium. Okay, in terms of this is what we can see is let me just clear this here. Is that you can see how how strong the trend is in July. All right, there's lots lots of major players trading, lots of major players probably sort of trimming positions and taking profit because they're going away for August. We can see that, yep, we get pullbacks. Yes, we're in a downtrend. Yes, we get nice, bearish pin bars, but you can see that the follow through, yes, there has been, but it's certainly not as strong as what we saw in July. And that is an element of August trading. And it's one of the reasons why, I sort of tend to take time off around this time. But, as I said all along, and it's one of the reasons we're doing these sessions, is that even if the market is quiet, you can still be working on your trading business. Okay, you can still be getting your plan squared away. Okay, you can still be refining it. You can still be improving it. You can still be, reviewing all your trades. You can still be making yourself as a trader the best trader you possibly can be, and help yourself build the best possible trading business that you can. Those are really, really good, strong goals to work towards. So, bit of homework for yourself is kind of, what I talk about, all the times, do you actually have a trading plan? If you don't, well, now's the time to start. Okay, it doesn't have to be perfect. Just get started. Does it cover those 4 M's of trading, which you'll hear me talk about? Okay, markets, method, money, myself. All right, it should do. Take a look at your existing trade results, all right, and go through them. If you haven't been keeping records, well, now's the time to start. But if you have been keeping records, what have you done well in those trades? What did you do poorly? All right, and that's okay. You're learning, you're trading to learn, you're a human being, it's okay. What are the areas you need to develop? Okay, what do you need to get better at? And can you reset yourself some new goals relative to your present performance for, let's say, for the last sort of 4 trading months of the year? We're going to have September, October, November, December. December can sometimes be a little bit like August, but September, October, November, they can be an early start of December. They can be, really fabulous trading opportunities. And I think that this year they will provide that. Okay. And you will have the opportunity to engage them. And so this is a chance for you to set yourself some goals. Okay. Both in terms of trading, maybe some personal development goals alongside that to help you improve as a trader. So to conclude, we'll have a little look. We've got a few minutes. We'll have a little look at the live markets in a moment. But, remember, price action is all about analyzing markets, utilizing purely price movement over time. And what we're looking for is price action triggers at significant prices, levels, or zones. And that allows us to build just a simple price action trading plan to trade pullbacks in dominant trends. So, as I said then, just as I said before, it's important firstly for us to have a plan. So if you don't, just get started, okay? It doesn't have to be perfect, just get started. Then we want to do is reviewing our trades and our plan. How can we improve? What new goals do we need to set for ourselves? Are they absolute goals or are they relative to our own performance? And if you're in a position where you're trading to learn, I always suggest focusing on relative goals. What could you do to improve your own trading routine? We just went through there once again. They're kind of like just a 10-step, okay, as a simple trading plan, as a simple trading routine, okay? That can be the starting point. You can refine it, you can improve it to your own case. And the reason is because process trumps everything as a new trader. It's not about you finding the single best trade that day. It's about having a good routine, good business practice, good process, which you can just follow day after day after day. As always, make sure you're managing risk. Okay, if you're not managing risk, you're going to have a challenging journey as a trader. Are you keeping good records? Take it what our colleague here, Dr. Elder, says. Okay, from the comments there about keeping good records, and are you reviewing them? Because by keeping good records and reviewing them, you are giving yourself the opportunity to be the best trader you possibly can be. So we've got a couple of minutes left. Why don't we have a little look at the live charts before we do? Just a reminder that our next session 49, next Wednesday, 6th of September. Come and join myself for the next in our price action trading guide. Session 49 is all about incorporating multiple time frames and price action, including the importance of multiple time frame analysis, how to incorporate it with price action, how to use it together to trade more effectively. Sometimes traders get a little bit overwhelmed. They think they have to look at everything, okay, from the monthly chart down to the 5-minute chart to find a trade. What we need to do is just have a very simple way to be able to incorporate them to help us, and that's what we'll talk about next Wednesday. So next Wednesday, 2 o'clock London time. Check your inbox for the webinar link, or head over to the Admirals platform website. You'll be able to sign up, okay, to be reminded to join us there. If you've got any questions or comments, okay, you can always contact us. You can see there's lots of different ways that you can contact us on social media. After this session, you'll also get a little feedback form. I'd really appreciate if you just take the 30 seconds just to fill it in. If you've got any thoughts or comments, or there's things you'd like to see me sort of, touch on in future sessions, that's the opportunity to tell us there. We're happy with that. We like to work with that. So if you take the moment just to fill in that form, we'd really appreciate it. So, as I said, why don't you just bear with me 2 seconds? What we'll do is we'll switch across to the we'll switch across to the Admirals platform, and then what we'll do is we'll just basically have a little look at what's available for us in terms of, during this August based upon our price action trading plan. So just bear with us a moment and I'll switch across. I'm hoping you can still hear me, hoping you can still see me, hoping you can also see the Admirals platform here. What I've got it on is I'm just going to move this for a moment, a second. I have got a profile here for the Swiss franc. Why are we looking at Swiss franc? Well, Swiss franc has been pretty strong, okay, pretty strong the last few months. Philip says, thanks for everything. See you next time. You're very welcome, Philip. Thanks for joining us. Swiss franc, remember, we're saying has been very strong, and on the flip side of that, some things like Japanese yen and some of those the sort of like the commodity currencies, Aussie, Kiwi, Canadian dollar have been very weak, and that is part of us doing our particular trade analysis to look for create watch lists of what we want to particularly look to trade. So what we had here is we just looked at the euro against the Swiss franc, didn't we? Let me just zoom in there a bit. Saying about how it had been in a very strong trend and it had pulled back and given us price action triggers, step 4, okay, nice price action triggers, but and we have moved down to the last month's low, but it hasn't been as maybe a stronger move as we saw in July, because that's August, and that's okay, but there's still opportunities showing up for us. Whereas if we look at just 1 second, oops, sorry, what we'll do is we'll look at here. So, for example, Australian dollar against Swiss franc has been, as you can see there, the daily chart. This has really been all this year. That has been, a real demonstration of Swiss franc strength and Aussie dollar weakness. And that's why we've seen this continued, and we saw it happening here. And if I'm just looking here on the daily chart, okay, and let's just, it should probably be. He says quite clear that the weekly chart for the year, you can see that's just been a very clear downtrend, hasn't it? Remember, we don't want to fight it. We want to find ways to ride it. And we had sort of at the latter half of June, latter half, and then July, and the start of this month, we had it. The challenge we had is we had pullbacks, okay? And where do we have pullbacks to? Well, we had pullbacks to the lows of the previous month, okay? And so there was a couple of pin bars there, but we haven't had the strong pullbacks, and that in itself can be an indication of the strength of the trend. And so those people who have the ability to maybe look down on kind of on 4-hour charts, okay, that is where there were opportunities on the 4-hour charts here at the start of the weeks, middle of the weeks, as we had the pullbacks, because it didn't pull back as hard as we would like. But now that's what we are particularly seeing here. And if I just look at that there, and just draw that in, what we might be saying is, well, actually, Paul, that is just building itself up as a bit of a bear flag, isn't it? We've had a long trend, a bear flag, and just watch to see how that plays out. Okay, over the next day or two, and this week. Remember, the end of this week to NFP, maybe that will just continue, and then we'll see. If there's an opportunity for it to basically continue in that existing trend. Kiwi against the Swiss franc has done the same, because as I said, we've had Swiss franc strength and Kiwi dollar weakness, and you can see all the way here just during this, these last few months, that has been in a very clear downtrend. But even in a clear downtrend, okay, it zigzags. There are pullbacks. Okay, price never moves in a straight line. That's what we're looking for. But provided opportunities back here, okay, in May, when it sort of bounced off the 50 period moving averages, okay. But this month we can see that that has just accelerated. It's accelerated away. So it hasn't on the sort of daily chart, hasn't given us our opportunity, but that trend is still very, very clearly in place. We've also said, remember what I was saying is that Swiss franc against the Japanese yen has been a really good, strong uptrend. You can see that hopefully yourself on that daily chart. That has just been, you know, a very strong trend because we've had Swiss franc strength, Japanese yen weakness. That has basically given us the sort of the boost for our particular trend, and we can see that. Here we go. We can see that bang. You know, we had a position here at the start of the month. Now, what we didn't have, this was a rejection candle, but it's not it wasn't a pin bar, it wasn't an engulfing candle, it wasn't a key reversal candle. It's a strong bullish candle, but for new traders, what we want to be able to see is like the pound against the yen, is we want to see at that time is, you know, a strong like engulfing candle or a pin bar. But we can see that through this month that, you know, that has continued, and then basically price was pulled back, and we're starting to go again towards the highs of this month. So, you know, those are still the trends that we want to be working with, okay, until they differ. What has been probably interesting is looking at the pound against the dollar against the Swiss franc. That has mostly been in a downtrend, but as I said, even in a strong downtrend, it's been pullbacks. What we saw at the end of last month was this, you know, that is it's a very strong double bottom there, reversal pattern, which also that, you know, the second leg of it was a bullish engulfing, a bullish key reversal. And that has probably been an indication that is showing us that, you know, the Swiss franc has been very, very strong for a few months, but the dollar has strengthened this month, right? And as you know, we can see that even though Swiss franc's been strong, we can see that actually the dollar has strengthened, right? And the dollar strength, and what we've been doing is coming back to this level around about 80, about 88. Okay, about 88 we've come back to. You know, we can see that this for most of this month. Let's just clear that and make this a little bit clearer. Make this a bit. What we can see is that, you know, what I see here is having printed that double bottom. You know, what we've done is we've had a little bit of a pullback, and now here we are. Is that price is going mostly sideways for the last couple of weeks. What we see is that the price and the moving averages are together. What you'll have heard me often say is that when price moving averages together, you know, it's kind of like when you're trying to force two north ends of a magnet together. Okay, they repel each other. And it's the same with price and moving averages. When they get all wrapped up like that, it's kind of a compression before the next expansion, and that's what we'll be doing. And you know, and if you know, maybe some people might say, well, actually, Paul, is it not already moving down? It might well be, but I think maybe the NFP will give us some clarity on that in terms of the position of the dollar on that. So we'll be watching to wait and see how that particularly plays out there. CAD against Canadian dollar against Swiss franc is as I was saying, you know, the Comdol currencies, you know, having had a bit of a month there, okay, back in June where they mostly went sideways, we can see we're into a downtrend. We put in a double bottom there, okay, but it failed to break out, and what we actually had there was bearish pin bars, which gave us enough distance to run down to the recent lows, and that's what we've done. And as I said, for the rest of the last few weeks, basically price has just been grinding its way down there. As you know, as I said, the market was a little bit thin, and we're now going to wait to see is this going to break lower, okay, giving us a sign of Canadian dollar weakness and Swiss franc strength. Or could it break up, all right, and put in a much bigger sort of almost like a triple bottom there? I think we shall find that out over the next sort of week to 10 days on that. Okay, ladies and gentlemen, so unfortunately as always, we've run out of time there. I do apologise. I always try and cram in as much as I possibly can into the session. So, you know, we're always trying to fly through, but remember, they're always recorded, so you can watch them later on the Admirals YouTube channel. So be sure to pick yourself up on that. So, I hope you found that useful. I hope that's given you some incentive on terms of, like, you know, working on refining and building your own trading plan. It's always great work to be doing. It is what will help you in your own trading journeys. As always, I wish you the best of success in your own trading journey, ladies and gentlemen. Remember, next Wednesday, 6th of September, you can come back and you know, we will be talking about multi-time frame analysis and how to incorporate that. Until such time, you know, have yourself a great trading week, and I will speak to you soon. Take care and trade well, everybody. Cheers.